Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Looking at the Australian dollar, the inverted hammer has managed to turn around the current 5-day sell-off that we saw here and now looking a little bit more healthier in terms of how the bull run is actually recovering and now looking back towards 67.25 as an initial target. I still feel though, as we get closer towards this 60-day moving average, a key indicator that could see a little bit more in terms of supply, and that comes in around 67.75 to 95. So in current pattern that's holding is a little more upside attempt is likely to be seen, but likely to run into the bears and maybe even see a repeat like here. So I'm not overly confident that this market will sustain as it's currently climbing. Looking at the euro, the market is now very much close to 110, and initial target still holding around 110.25 to 75. I feel that there could be a little bit more of a struggle as the rise occurs towards this top side. Let me just change it so we can see a little bit more clearer. We've got a rejection around 110.40, so allowing a little bit of judgment of error that in terms of that could see a little bit more upside to stretch into 75 and then see another down test and eventually back towards the low side of 107.45 to 55. The dollar yen, well, the market posted an outside range day and negates this current hanging man here, and therefore looks towards a possible ease to 132.80. But towards that level, I find the market might actually stage a bounce, and therefore look further to that topside call, which is still around 134.80.90, and reassess. The sterling pattern looks a little bit to the firmer side, as the market now focuses back on that top side of 125 or a 10-month high. Still be a little bit cautious because there's somewhat divergence here, and the fact is that the market might reject and therefore look back to the downside and look towards 123.10.15. Well, the market came back in quite strong for gold as it looks towards this topside challenge. The 2032 to 34 is still a key area. A close above there would give further scope towards the top side and look towards 2068 to 70. But I'm a little bit skeptical in terms of how this market can actually claim these highs, as there is bearish divergence and we could see a snap, especially on the weeklies and also on the dailies. Now that would imply that we could see a snap back to the downside and reject the region of 2032 to 34 and look back towards the 1969 to 72. Failing to get that pullback to fill this gap, the market surged higher and now captures the top side level of $82.40.90, but lacking momentum. See this divergence here? The market's pushed higher and the indicator's dropping. This to me looks like very much a bull trap, and therefore we could see a pullback towards a region of $79 and reassess. Well, that's a wrap. Thank you very much for joining me, but please keep an eye out for the end of the day wrap and also the intraday report.